Hello students, this is your teacher Padma. In the previous video, we discussed about the capital, liability, assets, revenue and expenses. Today, I will be discussing the other basic accounting terms which you need to know. Purchases mean the total amount of goods purchased by the firm on cash or credit. The term does not include purchase of any asset such as machinery, stationery, etc. If the owner of the business takes good for personal use, it will not be included in purchase. In a trading concern, purchases consist of goods for resale. In a manufacturing firm, purchases consist of raw materials, semi-finished goods and finished goods. Sales mean the amount of goods that is sold to customers on cash or credit. If the company sells its fixed asset, it will not be included in sales. Apart from this, goods sent on consignment and goods sold on hire purchase basis are also excluded from sales. The amount of goods returned by customers is deducted from total sales to calculate the amount of net sales. Stock means the goods which are unsold on a particular date on which the balance sheet is prepared. To calculate the value of stock, it is necessary to prepare a complete list of all the items in the godown together with their quantities. Stock is valued on the basis of the cost or market price, whichever is less. The stock may be opening or closing stock. Opening stock means the goods which are unsold in the beginning of the accounting year, whereas closing stock means the goods lying unsold at the end of the accounting year. Debtors mean a person who owes money to the firm on account of goods sold on credit. The term debtors involves the total amount of money which customers owe to the firm. When goods are sold on credit, the money which the customers have not paid for receiving goods and services represents debtor. Loans and advances granted by the firm are not included in debtors. Creditors mean a person to whom the firm owes money on account of credit purchases. Creditors include trade creditors or creditors for the goods purchased on credit. Loans and advances raised by the firm are excluded from trade creditors. Debit entries are shown on the left-hand side of an account. In use of personal accounts, debit the receiver. In case of nominal account, debit an expenses. In case of real account, debit an asset. Credit entries are shown on the right-hand side of our account. Rules for credit entries are credit the receiver, credit a liability, and credit a revenue or income. This is the last accounting term, discount. There are two types of discount. First is trade discount and second is cash discount. Trade discount means the discount allowed on printed price at the time of sale. For example, when a mobile phone with a printed price of rupees 20,000 is sold at rupees 18,000, this is known as trade discount. It is a trade discount of rupees 2,000. Trade discount is given to increase sales. Cash discount means the discount allowed for prompt payment. When the buyer makes the payment within the specified time or on the spot, cash discount is given. Its purpose is to encourage the customers to make prompt payment for goods purchased.